you are going to have to, at a granular level, zero down onto every single potential data gap that you may have and start to track and trace that through the block explorers to piece together as much context and information that happened with those transactions as possible. And then it gets very contextual based off of that context and the data that you did build. You're going to have to make assumptions and document those formal assumptions on the tax treatment. And you want to apply conservative tax treatment to most data gaps that you encounter. So overall, this is a question I get a lot at Camuso CPA, where, they're like, okay, I do want to do this historical reconstruction, but I'm just getting worried because I don't have all my records. I don't remember all my wallets. I usually say you and everyone else. Most people are not going to remember every wallet they have or have every exchange when they're going 10 years back. And this is going to be part of the reconstruction process is seeing where these reconciliation gaps exist, applying a conservative tax treatment to those reconciliation gaps after gathering the full context via on-chain research and accounting. And then the last step is documenting these assumptions. So you have them in your permanent records along with your audit trail and accounting for audit defense purposes. So another challenge with the cost basis reconstructions that I briefly mentioned just a moment ago is that you can't just blindly rely on crypto tax softwares. They're useful because they're going to assist with us aggregating large amounts of data across many data sources. But it is well documented through not only practitioner observations, but through research as well that I've even covered on my podcast with the researchers that conducted it, that different platforms produce materially different results from the same underlying transactions. Meaning you can go and take a tax year that you did, potentially put it into 4 different crypto tax calculators and get 4 different results. And, the treatment varies because there's just many variables and assumptions that go into these calculations. It can be a divergence in treatment across your missing acquisition history, how transfers are matched, protocol classification, pricing, how timestamps are applied, how, tax characterization is going to get applied to certain transactions like wrapping, earning, taking. You need to understand that it's not plug and play. And additionally, in the event of an audit, you as a taxpayer are responsible for what you're claiming on your return. You're not going to be able to just point to a software output and say, I relied on that and leave it at that. It's your responsibility to ensure accuracy with this. And another challenge is that not all platforms are going to give you that tax lot level cost basis report. This is an issue because after you've done maybe 5 to 10 years of reconciling data on that platform, if you ever wanted to switch from that platform, it's going to be more of a challenge to switch without redoing the reconciliation because you're not going to just be able to take that tax lot level report and roll it into a different system. So you want to make sure that you are able to defend the methodology that you're accounting with and you're not just blindly relying on the software, that if there's data gaps, you're documenting them, that you have the reporting that you need to retain for your permanent documentation for tax purposes. And overall, the integrity of your calculation, the defensibleness of it, and the documentation is your responsibility to maintain.